All right, ladies and gentlemen, welcome to the 25th ever episode of the Failing to Success in Multifamily Show, a podcast where we appreciate, discuss, and reflect on the setbacks real estate investors have had leading up to their success. Today, I have the absolute honor to have Michael on as a guest. We connected on Instagram, and I have had the chance to learn more about him as a person through his social media outreach, but also as a well-established real estate investor. Mike is a 30 plus year real estate investment veteran. He has control over $285 million in real estate transaction. Mike is an entrepreneur, author, real estate trainer, public speaker, and personal coach with strong personal resilience and a deep desire to help others live an extraordinary life. Now, he has coached hundreds of real estate investors to fulfill their dreams. And guys, he is an absolute rock star, and I can't wait to unpack his journey along with you guys. Now, I'm sure that behind all of his successes is sacrifices, dedication, and a whole lot of hard work. So I can't wait for you all to hear his journey, his successes, but most of all, and the reason why we're here today, his failures as he continues to reach his goals within multifamily. Michael, it's a pleasure to have you on. Welcome to the show, my friend.
Thank you. I appreciate it. I appreciate the opportunity and hope that I can add some value for your listeners.
Man, thank you so much. And frankly, I'm so excited to take a deep dive into your background. You have a ton of experience within our beautiful industry, and I think I did a pretty bad job at describing who you are. So please, Michael, give us a high level or a low level overview of who you are.
Yeah, I appreciate that. And it's funny, you did a great job, by the way, because sometimes I have to look around and say, are they talking about me? So because of the failures, right? I love your show and the failure part, right? Because you and I were talking earlier about how on social media, you only see these successes and the great things, right? But you don't see the struggles along the way to get a deal over the finish line or to get one done. So, yeah.
Very good point. And a lot of the time, I'm a strong believer at the real value and the real lessons are learned from people's failures rather than their successes. And so the real goal with this show, with this podcast, with these conversations is to provide value to all levels of experience within our multifamily industry and to really help people avoid, help them avoid those same mistakes,
Absolutely.
So yeah, Michael, give us an idea of who Michael is.
Yeah. So I appreciate it, Tinny. So I've been in the business 30 years, started out as a real estate agent. I came from a construction background, and it's funny because I had a pretty successful construction company. And but like every entrepreneur, you're so ingrained in your business that it's all consuming, and I burned out. So, I was doing the hiring, the firing, the marketing, the bookkeeping, and still in the field banging nails. And woke up one morning and I vividly remember looking at my wife at the time and saying, I can't do this anymore. I'm burned out. So I was fortunate. I had somebody knocking on my door that they wanted to buy my company. And so I sold the company and we took a year off. But like any entrepreneur, you never take time off. So during that year, we house hacked a couple of houses. And I heard years ago Jim Rohn say that success leaves clues. And so I met a real estate agent along the way who was extremely successful and went to him and said, I think I'd like to go in the real estate business. And he really encouraged me to do it. He said, I think you'd be great at it. So I picked his brain. He made me a cassette tape that I listened to over and over again. And I always equate that to these podcasts, because you can go back and listen to the information and get those highlights and get those tips that'll help grow your business. But I listened to that tape over and over again. I went into the real estate business, and my first 9 months in the business, I sold 78 houses.
Wow.
I was RE/MAX Rookie of the Year that year. And I went on to build a team, and we sold about 125 listings a year consecutively for about 12 years. And in 2005, the market started to change. There was a softening. I knew that we weren't going to sell as many houses. I had about 7 people working for me at the time, and said, I don't want to have to lay people off. I want to be able to keep people busy. Always wanted to go in the apartment business. And so I decided to go into the apartment business. I went out, and you want to talk about that first deal you did, or a deal that you really kind of made some failures on. It was my first deal. And it's because I didn't know anything. I went out, I found this 11-unit apartment building. I put it under contract. All of a sudden I realized, hey, I have to raise capital. So I went out, I put an ad in the newspaper that said real estate investors wanted. Best $45 I ever spent in my life. My phone rang off the hook. I wound up raising about $600,000 in private equity from that little ad. But I got that deal closed, and I learned a lot along the way, because I realized I didn't know anything. I didn't have a buying strategy. I didn't have a due diligence plan. I didn't have an exit plan. All the things that I learned from that one deal that helped me to grow. From that first syndication that I did, I went out, I raised $18 million. I bought $60 million worth of real estate. It was about 4,000 apartments in 5 US markets. Wow. And I did that in 30 months. So I grew really fast as a company. I also built a property management company. We vertically integrated, and we were managing about 7,500 units.
Wow.
And like I said, I grew way too fast. I was very unstable as a company. So if we have to talk about failures and mistakes, there's one right there. That was, I always coach people today and say, take your time, you'll get there, right? Just keep doing the same thing over and over again, you'll get there, but you don't have to speed up the process, because the instability in that growth was crazy. I wound up having over 100 people working for me, had a very large payroll. It created some instability in my business, as well as the instability that started to happen from the market. But during that time, I bought 4,000 apartments, and 2008 rolled around. And if you remember 2008, worst economic crisis the country or world has ever seen. And I started to implode. So I started to unravel as a company because of that growth we had. And then I didn't pay attention to all the details. I just kept trying to build the company. And I thought I had a great team behind me, and I really didn't. So we started to experience some struggles. And by 2010, what the economy got to be, the job losses, the foreclosures in the marketplace, the bad paper on Wall Street, all of that equated into failure, really. And we started to implode. So now I have 38 companies, some of which are running really well, some that are running very poorly. And I probably had a dozen companies. I should have just let the deals go to foreclosure, let those investors get hurt. But I thought, you know what, let me save everybody. And actually, Tinny, my thinking was that this is just a recession. I had been through a couple of recessions. They last 17 or 18 months. There's a 10 or 12% correction in the marketplace. Yep, not this time. This thing went on for 7 or 8 years with a 40% correction in the market.
Yeah.
So I said, well, let me try and save all my investors. I'll try and save my entire company. So I started to move money back and forth between companies. And my accountant and my attorney both said it was okay to do that. Just leave a paper trail when the markets come back. And everybody was under the same impression, this is just going to be short term. Yeah. When the markets come back, put the money back. So I did that. Now, the problem was I didn't disclose it to my investors. And when we raise capital and we're in this space, disclosure is very important. We need to be telling our investors everything. And I didn't. So for non-disclosure, I wound up getting charged on wire fraud and mail fraud charges, and got sentenced to 10 years in federal prison. So 2013, completely imploded, lost everything, went off to federal prison, and served about almost just about 8 years, a little over 7 years. So while I was gone, now, I went from this lifestyle of, I never flew private. I didn't have a big house. I didn't buy a fancy car. I was the neighborhood baseball coach, home every night for dinner, to getting ripped from that to live in a 12 by 12 room with 3 men I didn't know, nor did I like, wondering what the heck happened in my life. I was in prison probably 3 weeks, 21 days or so, and my wife decided to divorce me, and it just kind of wrecked me. So I started to, walk around every day wondering, how was I going to get through today, much less 10 years of this. And probably in about 6 weeks, and Tinny, I always believe we have these defining moments in our life, and people either choose to take those defining moments, use them to their best, for the betterment, or they choose not to. You ignore them. Well, I don't know. I walked in the gym one day, and you have to remember, I had gone from running marathons to being 35 pounds overweight. I hated myself. And this guy walks up to me in the gym, and he says, "Hey, don't let these people beat you. All they want to do is take from you everything you've ever known. They can take your business, they can take your apartments, they can take your money, they can destroy your family. But what they can't take is who you are and what you're made of. They can't change your mindset."
Love that.
And he said, "Come to my class every day, start working out. You'll start to feel better. You'll start losing weight." And I don't know what it was, but it was like somebody flipped a switch. And all of a sudden, I said, okay. And I started going to this class. I started working out. I started to feel better. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books while I was gone. One is Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy. I wrote a book on property management, and I wrote an ethics course. So while I was in prison, I taught real estate investing, property management, and ethics for 6 years. I was on an outreach program. I went into the community and told my story to local business owners and college students. Wound up meeting a professor from the University of Minnesota, and he and I co-authored a paper together that we had published in the Business Journal of Ethics. I came home in 2020 when they closed the world down for the pandemic, the same week. And I went from one prison into another. So when I came home, I said, well, let me start a coaching and training business. And what I do is I work with multifamily investors. I teach them how to build their business, how not to make the mistakes I've made. I also got approved by the SEC to go back and be an issuer of securities and a sponsor of deals. So 2 of my coaching clients and I have closed our first deal, and I'm partnered with a couple other people now doing some, a new construction project and a debt fund, and, just really kind of rebuilding and getting back into it. So
that's amazing.
Yeah.
Michael, oh my goodness, a lot to unpack here. A lot to unpack. Thank you so much for one, being vulnerable and providing this clear picture of, not only where you are right now, but also where you came from. A lot of solid nuggets here, and I made a lot of mental notes as you were describing your life. One of those, first, I want to take it way back, right? A lot of our listeners are newer in investors, and a lot of our guest speakers in the past did start out the same way that you started, by house hacking. You know,
Yeah.
I will always say this, and I'll say it very briefly. House hacking, first of all, is when you buy, you know, one to, however many units, and you either live with roommates by, renting out bedrooms, or you rent out a whole entire unit to somebody else, and the rent income from the, that room or the property, offsets your mortgage bill, and you're able to, live off of lower expenses. Such a great method to get started. Another thing that I want to point out, Michael, as you were speaking, is you are an amazing, like you are a hard worker, right? Because you find a roadblock that's in front of you, and you're able to overcome that roadblock, and that's the way that you're able to raise capital, right? You got an 11 unit under contracts. You didn't know exactly what your next steps were, but you took that leap, right? Right. You jumped off the airplane and built a parachute on the way down.
Right.
So a lot of individuals, it takes a lot of guts to do something like that, but you were able to not only figure out that you wanted to be in apartment investing, but you're also able to manifest it by raising the capital needed through an ad, by the way, which I may start doing now. But yeah, like super, super amazing. So let's dive into the before we dive into the deal, let's dive into your transition to multifamily as you were in, a very successful agent. As you
Yeah.
know, multifamily is a relationship business. And that's mostly the way that we build teams, and we're able to tackle on these larger deals. Um, what was that transition like for you, as far as building the relationship and essentially um, building your portfolio at that time?
Yeah. Interesting question. I think the business is different today than it was a decade ago.
Interesting.
Matter of fact, I know it is. Today it's more about the teams you put together and who can handle what load.
Yeah.
Back then, you built a company and you hired people to do those things. Same concept, different way of doing it, right? But I knew nothing. I knew how to sell residential real estate. I was a sales guy. And so I went into that first deal not knowing a thing. Didn't know I should do due diligence, didn't know how to underwrite, didn't have a tool to underwrite, didn't have anything. But what I did was I listened to the seller, and the seller said, hey, you can buy this, restripe the parking lot, reseal the parking lot, rehab these units, put new tenants in, you'll be able to raise the rents $100 a unit.
Interesting.
None of that happened. I raised the money to close the deal. I didn't raise enough money to do the capital improvements, right? I didn't know to do that. I figured I'd have enough money coming in from rents to be able to do that. I didn't. So everything I did, I learned along the way, just because I took action. I think a lot of times people get so overeducated.
I agree.
And they get caught in analysis paralysis, right?
Yeah.
And I'm not going to do this till I figure out how to do it. Well, you get some education, but go take action. That's really, I've always been a hands-on kind of learner. So I have to go do things. Yeah. That's why I sold 78 houses the first 9 months I was in the business. Somebody told me what to do and I went and did it. Yeah. So when I bought that deal and realized very quickly that everything that seller told me was not right, I had to figure out how to make it right.
Yeah.
Well, I sat down with my broker at the time and I said, what do I need to do different? And we built a buying strategy, and we built, a process for underwriting. We built a process for the due diligence. Nice. I asked the questions. Heck, I didn't know what NOI meant when I went in the business. So I think language is really important, as part of early education for people. Mm-hmm. And learning and understanding the industry language or lingo.
Yeah, lingo is key.
Yeah. So.
Yeah, very, very well said. I mean, that's personally, that's exactly how I got my start into multifamily. You know, like when I really think back, it was never really the first deal that I did that got me my start. It was really the ground level work, right? Which is the lingo, the definitions, the calculations, right? That really got me my start and got me comfortable in taking those steps. So, man, this is your story is amazing. Story is amazing. So let's dive into a deal, Mike. You've done quite a bit of transactions. But I want to dive into a multifamily or commercial deal that you either did recently, which I'm very proud of you for doing, by the way, or one that you did in the past, right? And tell us what the deal looks like and how you found it and essentially, what was your biggest challenge about the deal itself as you were running it and how you overcame it.
Sure. So I'm going to talk about a deal that we did in Dallas
Okay.
later on. The first one I bought was 11 units. Then I bought 64 and 87 and 187 and 287. And, I never thought I'd close a 200 unit deal,
Wow.
right? My goal was to buy, 400 or 500 units. And then I got into it and it got in my blood. I think it's always been in my blood, in my DNA. And I love the business and I love this, right? I love building relationships with people. And that's what you and I get the opportunity to do right now on this podcast too,
Sure.
is to build that relationship.
Sure.
So I'm in Dallas one day and I had a broker down there that I did some business with, and he knew I was in town because we had just had dinner the night before. And he knew I was down there just kind of looking at our assets that we owned. I had a big footprint in the Dallas-Fort Worth market and knew I was looking at some other assets. And he said, "Hey, I just got a phone call from a seller who wants to sell a property. Let me set this up for you." So the seller owns this 450 unit deal.
Mm.
And he had just refinanced it. And when he refinanced it, he pulled $2 million in cash out of the deal. Well, 30 days later, he finds out his dad is sick and his dad's got stage 4 cancer. And he says, "Hey, I don't want to be in the real estate business anymore. I want to take my chips off the table and spend the rest of my dad's days with him and, be with family." He tells the broker, he says, "I don't care how we do it, get this sold, get it off my plate." So he had two assets, this 450 unit asset and another smaller one in Alabama that he sold. And we went in with a creative financing deal. So it was at the time, it was like a 13 cap and it was a $15 million asset.
Wow.
And we said that we would come in, we wouldn't buy him out, because if we would have bought him out, he'd have had a 5% prepayment penalty that he'd have to pay on the $12 million, which would have been like $600,000. So right. So he just took $2 million off the table, didn't want to pay $6 million and then have to pay the tax.
Yeah.
So we saved him about $1 million by structuring the deal this way.
That's awesome.
So we said, we'll quietly assume the first mortgage note of 12.5.
Yeah.
And I don't have the other 2.5 million that you need, but here's what we'll do. We can get this deal done right now. We'll give you $250,000 down, and then we'll pay you $250,000 every 6 months till we take down the 2.5 million.
Nice. I like that.
Which most of that money, probably about 300,000 of that money came from the cash flow on that particular property. As we continued to do repairs and renovations and got rents up and increased the value, more cash flow came as a result of it. So over a couple of years, we were able to take out that $2.5 million note. But it was the structure of the deal. So here you got a seller with a problem, says, "Solve my problem for me. Please help me solve my problem." here's how we can solve the problem. We could do a creative structure on your deal, get it off your plate. You can go be with your dad. We'll take over the property. We'll do all this capital improvement and all of this stuff to the property, which we did. We increased the value of the property. Funny story, about a year ago, I ran into a guy who read my book, and I tell this story in my book. He read my book, said, I just bought that property at a 4 cap.
Oh,
He
wow.
paid about 40 million for that deal, and we paid 15.
Wow.
So it's just kind of interesting how this business
Yeah.
and how things circle around. So, but I had learned a lot from back in 2005 with that first deal that I knew nothing, to be able to structure this creative finance deal. And, all in all, we raised about 800,000 on that deal at that time.
Oh,
For mostly capital improvements.
that's
So,
amazing.
yeah.
Yeah, because the cash flow covered the payments, and then all you had to do was pretty much, come out of pocket for the capex, and that's an amazing, amazing, amazing. First of all, structure, but also that's why I love this industry so much. Because in residential, you can do the same thing, but it's kind of not really frowned upon, but it's not really as opened as in the commercial space, right?
Right.
Because in residential, they're called subject twos, where you assume the loan, but you can't really tell the bank about it, right? But
Right. Right.
in commercial, it's actually like something that lenders are open to. I know that CBRE is open to loan assumptions. And what an amazing structure. And I actually took notes because the way that you are able to the way that you're able to structure the deal where he gets paid every 6 months from the equity that he wanted out of it is fantastic.
Yeah. Yeah.
I've done one seller finance deal. It was on the residential side, subject to, and I'm actually working on a seller finance deal right now. It's a 28 unit, close to Uptown Charlotte, and like something similar. He's carrying a note though, at a fantastic rate. But I just love this business, right? Because you can get as creative as you want, as long as as long as it's a win-win scenario, obviously. Yeah, wow, that's amazing, amazing story. Um, Thank you for sharing that, by the way. I want to get into what I really find impressive with you, Michael, is your mindset. You were able to once again be super vulnerable and talk to us about the challenges that you went through, and most of all, the lessons. Um, how did you keep yourself motivated to get through the challenges you encountered? Not only in your life, but to close the many deals that you have closed.
Yeah. It goes, I think it's two things for me. You had mentioned earlier about values, and
Yeah,
I think I have two really ingrained values in my life. One is I've always been a mindset guy.
yeah,
Tony Robbins and some national speakers, right? And you put enough of that good stuff in, that's what comes out.
yeah.
So my mindset has always really kept me focused in that direction.
Hmm.
Um, the other thing is work ethic. I think I
Hmm.
learned at an early age from my dad, work ethic, and that you have to put the work in to get the results.
Yeah.
And so I've always been a guy that works hard, but has a good mindset around it too, where I believe I'm going to achieve it. So, Earl Nightingale said years ago, that you can achieve what you believe, right? I'm
Hmm.
paraphrasing, but um, so, I just believe that I'm going to move the ball forward.
Yeah.
And I've had a coach for 20 years. I had a coach back before it was, even the chic thing to do. Now everybody has coaches or is a coach, and um, so I still have a couple of coaches in my life today,
Like
but
that.
it's it's keeping that positive mindset, believing in yourself, believing in the process. We talked about education earlier, and once you learn how to do something, now you have to take action.
Yep.
So
Absolutely. I love that about you because, in your past, you also didn't really, need too much information to take action, right? So, like I just love how you're about, taking the steps that are gonna get you to be in a position where you can learn, but also do what you want to do and accomplish. So,
right.
I definitely applaud you for that, Michael. One of the last questions that I have for this segment is one word that describes you when the going gets tough. What is one word that would describe Michael when things get really difficult, but you're still able to push through?
Tenacity.
Love that.
Yeah. I don't give up.
Yeah.
So I used to have a saying when I was selling residential real estate that they either listed with me or they died, because I always followed up and, always staying in touch. I remember I was probably in the real estate business about 3 years, and I walked into a guy's house and he said, "Man, Morawski, you are the most tenacious person I know." And at the time, I didn't know what it meant. I said, "Oh, thank you," hoping that it was something good, right? And I ran home, I grabbed the dictionary, looked in the dictionary, and I said, "Yeah, that is me." I don't give up. I just continue to go after it.
Love that. Yeah. I think personally that's a trait that most successful entrepreneurs have, right? No matter, the ups and downs in their lives and the challenges that are thrown at them, they stay tenacious, and at the end of the day, they always come out on top.
Mm.
So yeah.
Yeah, for sure.
Michael, I have had an amazing time talking to you, and honestly, I can't wait for the future conversations that we'll have because I feel like based off of your experience, you have a wealth of knowledge to provide. I want to ask you some final questions here. These are dedicated to your goals for the rest of the year, what you're working on, and who can help you accomplish those goals. So these next few questions are really focused around you.
Okay.
So the first one of the three is, what are your goals for well, not only the rest of the year, but going into quarter 1 of 2023?
Yeah. So my goals are pretty specific. First of all, to grow personally, because I don't believe any of us grow professionally unless we grow personally.
Yeah.
So I want to always keep growing personally. And, a lot of that comes from my daily discipline. So it comes from me being in the gym. It comes from me staying healthy and eating right. It comes from me working on my mindset, my time with the Lord, my meditation, those things. So as long as I continue to grow personally, I know I'll achieve my professional goals.
I love that.
For next year, a couple small goals are, I want to get my next book published, which is on property management. Just trying to finish up the edits on that now so I can bring that to market. And I want to work only with 8 coaching clients that are coachable and want the business as bad as I do, because those are the people I wind up partnering on deals with. So I want to next year buy somewhere between 500 and 1,000 units, but I'll also raise $20 million in capital next year in private equity to do those deals. And I'm partners in a couple of other, in a debt fund and in some new construction that we're raising capital on those.
Love that. Absolutely love that. Now, what is one thing or one person that will help you in your business right now in order to accomplish these amazing goals that you have for next year?
Yeah, I think it's like what I said. Somebody first of all who's coachable and wants the business as bad as I do, who wants to learn and be coached, and then wind up partnering on a deal. That's one. And if I had to say one other person, a high net worth investor who had interest in real estate, but didn't want to get their hands dirty and wanted to place a few $1,000,000.
Awesome. Guys, if you know a high net worth passive investor or somebody who is looking to partner with Michael, a wealth of knowledge, a wealth of experience, through many ups and downs, he's still able to move forward and do it successfully as an operator. So please connect with Michael if you want to learn more about how you can take advantage of the deals that he's looking at. And then I see your book in the background, and I will actually get a copy of it, The Exit Plan. Tell us a little bit more about the book, and where can people not only connect with you but also with your resources.
Sure. I just want to circle back on one thing and just say, if there's somebody that I can help and pour value into their life, that's really where I like to spend my time as well. So I do some community service and things like that I get the opportunity to do that. So I always love to pour back. One of my missions always in the multifamily business has been to provide safe and secure housing for my tenants. And I've always been an advocate of single moms and feel that, hey, listen, a single mom is at work. When her kid comes home from school, she wants to know that when that door closes in the hallway behind her, that kid's going to get in the apartment safely, not be hassled by a gangbanger, not be hassled by a drug dealer, not trying to get hustled into a gang. And I wanted to provide that safe housing. So I think that's really important from a mission standpoint. You, Tinny, send me your address and I'll throw a copy of the book in the mail to you. But anybody who wants a copy of it, you have two ways of getting it. And I wrote the book Exit Plan because there's so many trainers and teachers that teach you how to find a deal, get in a deal, operate a deal, but nobody ever teaches you how to get out.
That's so true.
I wanted people to learn how to get out, when to get out. And it doesn't just mean selling the deal. There's multiple exit plans.
Yeah.
I wanted people to know how to maximize their profit. So that's why I wrote the book. You can get it at my website. You can go to mycoreintentions.com/exit plan and get a free copy of it there. Or if you're like, and that would be an ebook, but if you're like me and you like a book that you can, highlight in the margin, highlight the words, underline, dog ear the pages. I'm an active reader when I read. So you can also buy a copy there.
Love that.
And connect with me, Tinny, just like you and I, we met on Instagram. I'm all over social media, whether it's LinkedIn, Instagram, Twitter, my YouTube channel. There's a ton of content on my YouTube channel for anybody who's learning, wants to grow, or needs inspiration. Go feel free to grab some information for yourself. There's a couple other free ebooks on my website that you can grab. And I love to network. So email me at mike@mycoreintentions.com.
Love that.
And be more than happy to jump on a call with you. That's
amazing. And I'm going to put all of your information in the show notes once the episode comes out. Michael, I actually really look forward to reading your book because you're absolutely right. Especially as a newer investor in the multifamily space, I'm starting to ramp up my portfolio now. And the conversation it isn't so much more about how to manage the deal, because that's happening well. It's more so, okay, what are some of the ways that I can exit this, right? Because that's not really covered in our industry. So I really look forward to learning more from your experiences and from learning, about how I can potentially, exit the many deals that I plan to acquire as well. Michael, it's been an amazing time. Thank you so much. We're right on time here. Any final thoughts, any final words for our audience before we close out?
Yeah, two things. One is I tell my story because I want to bring hope and inspiration to people, right? And I want people to understand you can't let your past define your future, that you need to take action and move forward. Go get education, go get the knowledge that you need, but don't let fear hold you back. Take the next step, take the action to help you grow your business and move forward. Whether that is that you need to go get a coach, or whether it is you need to read a book, or whether it is that you need to start underwriting deals to find a deal for yourself. Take the action, the necessary action.
Love that. Love that. Michael, thanks again so much. Guys, it's Tinny Collin and Michael Mindset Morawski signing off. Bye, guys.
Thanks, Tinny.